Hi, this is Paul from globaltradingsoftware.com, and this is a tutorial video using our range breakout cradle to grave bundle with the addition of the bias depth heat map to give you that complete trading strategy around certain ranges. So these are data ranges or opening of stock markets, and in this case it's the European gold pit open at 8 a.m. European time, which is 2 a.m. EST. Big glut of activity at that time when European traders really start to get to work and start to add the volume. So we can define that range. So we've got a couple of things. This is copper, by the way, on the 5-minute time frame. Great for range breaking that time when those European traders really start. So the first thing is that the range breakout indicator, part of this bundle, actually defines that first 5-minute range. It also colors it in red, and it gives the range a bias of red. So we're only looking for a short trade. So we're looking for a short trade just underneath this opening range here. Okay. But what we want to do is also, we look it down at the bias depth heat map at this point, and we are green, we are yellow, we are red. So there's some indecision there on higher time frames. So if I just, you can see these are blocks. So these are 6 different time frames higher than this one. And what it's doing is giving you the bias. As you can see here, we've got defined the range. It's red. We're looking for a short trade, but we need some confirmation. And as this goes sideways into this range, we can see now on this candle here, where my cursor is, if we look down, all 6 time frames have gone red. So we've got that confirmation, that bearish confirmation. A couple of candles later, we get in the trade, we go short. We're then pulling back. We've got a great short trade. Now the grave part to that cradle to grave is the manager. So we have this red cloud, if you like, ribbon, whatever it is, it's red. So it's telling you to stay in the trade. Not only that, when we pull back against this main bearish move, these candles have lower than average volume. You see these blue dots underneath? So it's telling you to stay in. Now we do have one green candle which has higher volume than this previous one on average volume, but then right away that next candle is a down candle on lower than average volume, and it starts to come back down again. The ribbon stays red. It's telling you to stay in the trade. Right now, good option is to lock in profits with a trading stop just above that pivot right there. So at this moment in time, we've got the entry, we're trailing, and we got 35 ticks at $12.50 a tick. This is a good trade. It's a simple strategy, and we can trade ranges on data or economic data. We can set those up in the back end of the indicator. When we're looking at the opening bar ranges, we get the European, we get the London Open, we can trade the New York Gold Pit Open, New York Stock Exchange Open, and then we've got 2 custom sessions where we can set that for any data point. So it could be non-farm payrolls, it could be housing data. No matter what instrument you're trading, there are instruments that react to certain data points, and we can define the start point of that data and then define the range and give it a bias. And that's what this is all about. And then trading out of that range when we've got that additional confirmation, if you like, from the bias depth heat map. So there's two things here. We've got the cradle to grave bundle, which is the range breakout and the manager together as a bundle, 21% discount, and then adding that bias depth heat map, which is new, but gives great confirmation. The links are down below in the description of this video. A great trading strategy and can be utilized for Forex and futures, and really looks at breaking those ranges and getting those moves just like in this video here. Hopefully that helps. Speak to you really soon.